Assalamualaikum and good day everyone. We are Group C and today we will be presenting our Project 1 for ACC407 Fundamental Financial Accounting and Reporting for Far Burger Store. This presentation has been prepared for Ms. Fatin Adila binti Razali. Throughout this presentation, we'll be explain our findings and discuss the key accounting concept related to the project. We hope this presentation will provide a clear understanding of the topic. Before we start our presentation, I would like to introduce myself and all of my members. My name is Mama Ikhwan bin Mustafa and my magic number is 2025483888.
Hello, my name is Ahmad Zafran bin Farid with the student number of 2025410616.
Hello, my name is Aizat Iqbal bin Burhanuddin, metric number 20254711864.
My name is Muhammad Abin Arfa bin Muhammad Azman. My student number is 2025410512.
Right now, I'm going to talk about the contents that we are about to present. The first is about the business that we are presenting. Secondly, we are going to talk about the background of the business. Thirdly, we will talk about the business characteristics, and after that, we will present the recording process, and then we are going to explain the strength, the weakness, and the improvement that can be made. Lastly, we are going to show the appendix for our presentation. Now, I will explain a little bit about Far Burger. Far Burger is a small stall burger business established in May 2025. The owner, better known as Abang Am, has developed his passion in entering the world of entrepreneurship when he was working under an employer of his past jobs. Now, he has strived to open his own burger shop even as an ongoing semester 6 student in UiTM Shah Alam. Abang Am has started his business with the initial capital of 10,000 ringgits. Abang Am has hired several students to become his workers and he manages the worker schedules himself. Far Burger also offers online ordering where the customers can order food online by joining Far Burger's WhatsApp group and pick up the food later. The hardest challenge for Abang Am is not actually about managing his business's financial, but rather to keep up with the quality of the burgers itself. Abang Am prefers to record his customers' orders but manually because he says that it helps him to be more careful when managing his orders. Right now, I'm going to discuss about the background of the business. Far Burger is located in front of the 52 in UiTM Shah Alam, which is on the riverbank at Jalan Tegas 1/16 40450 Shah Alam, Selangor. Far Dom Burger is a sole proprietorship business that is just launched their grand opening in May 2025, which is around a year ago. Their objective is to gain wealth while serving food for hungry college students, especially during the nights. Far Dom Burger has started its business with the initial capital of 10,000 ringgit. It offers a wide variety of delicious midnight snacks such as burgers, fries, and etc. As of right now, Abang Am has already recruited 7 part-time workers, which is hired among the students of UiTM Shah Alam, who needs an extra income. Far Burger offers a variety of different menus. These include chicken or beef burger, banjo, French fries, chicken nuggets, and also regular or cheesy wedges. The customers can order by attending to the burger stall physically, or they can also order it online via WhatsApp group that have been provided by Abang Am. The average total of customers per day is about 50 to 60 customers.
Moving on to the recording process in accounting. Recording process is important because it helps a business to keep their financial transaction for smooth and accurate. There are 5 steps in the recording process in accounting, which is source document, journal, ledger, trial balance, and financial statements. First of all, let's start with the source document. The source document is the first transaction document that can be used as evidence in a business. For example, the source document can be a cash receipt, invoice, check, debit and credit notes. It has important details such as a date, amount, and the type of transaction. The source document is important in a business because it keeps accurate record and can be evidence of transaction in a business. The next step is a journal. The journal is the first place to the record transaction to be documented. This journal is known as the original book entry because it records the first transaction process in this business. It will record all transaction entries in the business which include debts and credits. The journal also recorded in chronological order, which means it will be recorded by date.
Next, I will explain about the ledger. Ledger is known as a book or final entry in accounting. After all business transactions are first recorded in the journal, they are transferred to the ledger account. In a ledger, each account has its own separate page or section. For example, there are individual accounts for cash, sales, purchases, and expenses. This helps organize financial information more systematically. The main purpose of a ledger is to classify transactions according to their categorize, and determine the balance of each account. By looking at the ledger, business owner can easily identify how much cash they have, the total sales generated, and the amount spent on the purchases or other expenses.
After preparing the ledger, we will create a trial balance. A trial balance is a statement that shows all the balance of the ledger accounts. It used to determine whether the record we have made accurate or not. A trial balance is also prepared on a specific date. To use a trial balance, we ensure that the debit and credit amount must be equal to each other.
Next, I will explain the financial statement. A financial statement is a final output of accounting recording process after all transactions that have been recorded in the source document journal and ledger. The information is summarized and presented in a financial statement. There are two main components of a financial statement, which is the income statement and the balance sheet. First, the income statement shows the business profit or loss during a specific period. It compares the total revenue earned with the expenses incurred. If revenue is higher than expenses, the business earn a profit. If expenses are higher than revenue, the business experience a loss. Second one is the balance sheet show the financial position of the business at a particular point in time. It's provide information about the business asset, liabilities, and owner equities.
Next, we're gonna talk about classification of business item. Classification of business item is differentiated by a different group, which is asset, liabilities, owner equities, revenue, and expenses. These different groups are very important in the business because it was used to manage the business and operation it more effectively. The first group is asset. Asset can be categorized as two, which is the current asset and non-current asset. The current asset is where the asset can be turned into cash, and usually the asset life is within 1 year, while the non-current asset is usually not for resale and be used for a really long term in the business operation. And usually the asset life is more than 1 year. In the slide given, you can see this is an example for asset in the Far Burger store, which is fans, a table, and chair for customer to sit down and chit chat and talking, the grills, and also the equipment for the cooking. Next, the second group is liabilities. Liabilities can be categorized as two, which is the current liabilities and the non-current liabilities. Current liabilities amount owing by the business that is to be paid within 1 year, while the non-current liabilities is amount owing by the business that is not repaid within 1 year. For an example, in Burgers, no liabilities has ever made to operate the business because the daily operation is using cash and the expenses will be settled down immediately. Next, the third group is owner equity. Owner equity is a business debt to the business owner based on the amount invested by the owner. It is also a financial obligation of the business to the owner. It can be categorized as three, which is capital, profit loss, drawing. An example, owner of Burger give initially capitalized of 10,000 ringgit Malaysia from his personal saving for business setup and to operate daily operation. The fourth group is revenue. Revenue is income earned from the business activity through selling their goods or providing services. Revenue also can increase profit and the capital of the businesses. For an example, in Burger store, they're selling goods, which is the food that they made, which is burger, French fries, nuggets, and cheesy wedges. And the last group, which is expenses. Expenses is money that need to be paid or will be paid to operate the businesses. Expenses will reduce the profit and the capital of the businesses. In Burger store, the expenses that they usually spend is their workers or their employees and their groceries to make their goods. Next, the recording method. In Burgers, owner track financial using book and pens manually. This system is used to manage and record daily sales and financial transactions of his business practice. Inside the book documentation, there will be a section such as name, date, pickup time, menu name, total payment, and quantity to jot down in the book. Next, we're going to talk about the strength of tracking financial record using a book and a pen. First, it is very low cost. Owner does not need to purchase software, computers, or subscription service yearly or monthly to track down their financial expenses. It is only required a notebook and a pen. Second, it is very easy to use. Store owner can record sales and expenses without technical knowledge. It is very suitable for businesses with simple transaction, and the employees does not need to learn a high-skill technique to jot down the financial transaction. Third, no dependency on technology. It can be used without electricity, internet connection, or electronic device. It's only need a book and a pen to track down their financial transactions. The fourth is quick for small-scale operation. Daily sales and expenses can be written down immediately in the business hour, so the employees doesn't need to wait a computer or internet or electricity to jot down their financial transactions. And the fifth, full control over records. Financial information remains physically with the owner and is not stored online, so it's highly likely to gone in the online storage. Next, we're going to talk about the weaknesses of tracking financial record using a book and a pen. First, it is very prone to human error, which is mistake in calculation or recording transaction can be occur easily. Second, time consuming. Summarize daily, weekly, or monthly financial data required manual calculations. Third, risk of loss and damage. Record may be lost, stolen, torn, or damaged by water, fire, or other accidents. Fourth, difficult to analyze financial performance. Tracking profit trends, expenses, and sales pattern is harder compared to digital systems. And the fifth one is limited accessibility. Financial records can only be accessed when the owner is there. When the employees want to check down the physical book When the owner does not there, it will be difficult to share information with partners or any others employees.
Now we're moving forward to suggestion that Farburger to improve their management. First is hire accountant to reduce system dependency. In technology's era, managing finance through online platforms such as the system Abang Am currently use, where it is undoubtedly more convenient. However, human oversight remains essential as error and technical issue can still occur. Therefore, it is important to have a reliable backup system in place to ensure continuity and accuracy in financial management. The second one is maintain a cash reserve and document non-digital transaction. Although Abang Am relies heavily on digital payment, maintaining a physical cash reserve is essential for handling some urgent expenses such as ingredient top-up, especially during peak hour or when dealing with vendor who prefer cash or balance for customer who pay in cash. It's also important to record all non-digital transactions like cash payment or pretty expenses in a physical logbook. This helps maintain a complete financial overview, reduce errors, and support smarter business decisions. And the last one is generate profit and loss reports weekly. As a small business with short production cycle, it is beneficial for Abang Am to generate profit and loss reports on a weekly basis. This allows him to closely monitor income and expenses in real time and assess profitability of each batch and sales period. By doing this, he can quickly identify any financial issues or opportunity that helping him make informed decision and avoid unnecessary investment in unprofitable production. Before we end our presentation, here are the references for our video project on Farburger. First information is provided by some staff with Dale during the first time we came. He gave us overview explanation where Abang Am is not available. Second, we interviewing Abang Am to get more information about management, deal with money, and operation of Farburger. These sources help us ensure the accuracy and relevant information presented in our video. Thank you.